Dear students, welcome to this session on Accounting for Partnership Basic Concepts Part 3. By the end of this session, you will be able to understand distribution of profit among partners, profit and loss appropriation account, under this journal entries, pro forma of profit and loss appropriation account. Distribution of profit among partners. The profit and losses of the firm are distributed among the partners in an agreed ratio. So, if there is a partnership deed and partners have agreed to share the profit and losses, however, if the firm earns a profit, in their agreed ratio, the profits will be distributed. If the partnership deed is silent, we have already learnt it in the previous session that if the partnership deed is silent, then the profit and losses among the partners will be shared equally. Profit and loss appropriation account. So, profit and loss appropriation account is merely the extension of profit and loss account of the firm. You have already learned it in your first PUC financial statements on how to prepare trading account, profit and loss account and balance sheet. So, profit and loss appropriation account is merely the extension of profit and loss account. So, this account is prepared to appropriate or distribute the profit among the partners, thereby keeping in mind all such adjustments like partners' salary, partners' commission, interest on capital, interest on drawings. Adjustments. Interest on capital. So, every partner contributes capital to the business. There are chances where profits are not earned every time. In such situation, partners might expect some interest on capital. Interest on drawings. That portion of the capital which is being withdrawn by the partners is called as drawings. And on such drawings, the business firm might expect certain amount of interest. Like for example, you have gone for a bank loan, and on repayment of the bank loan, you need to pay a certain amount of interest. Partners' salary, partners' commission. Here, apart from interest on capital, partners might also expect a certain amount of salary or commission for the work that is being done by them. Journal entries. So, these journal entries are with regard to the preparation of profit and loss appropriation account. So, in your first PUC again, you have learned about how to prepare profit and loss account. So, under profit and loss account, you will either arrive at profit or loss. And the same profit and loss is shown in the balance sheet under the heading called capital. Here it is profits are either added or the losses are being deducted. First point, transfer of balance of profit and loss account to profit and loss appropriation account. A. Suppose there is a profit. So, suppose if there is a profit, then we will have to pass this journal entry. Profit and loss account debit to profit and loss appropriation account. Suppose if there is a net loss, then profit and loss appropriation account debit to profit and loss account. Interest on capital. For crediting interest on capital to partner's capital account, the journal entry is interest on capital account debit to partner's capital or current accounts individually. For transferring interest on capital to profit and loss appropriation account, journal entry will be profit and loss appropriation account debit to interest on capital account. 3. Interest on drawings. A. For charging interest on drawings to partners' capital accounts, journal entry, partners' capital or current account debit, that is individually, to interest on drawings account. B. For transferring interest on drawings to profit and loss appropriation account, journal entry, interest on drawings account debit to profit and loss appropriation account. 4. Partner's salary. A. For crediting partner's salary to partner's capital account, journal entry, salary to partner account debit to partner's capital or current accounts individually. B. For transferring partner's salary to profit and loss appropriation account, journal entry, profit and loss appropriation account debit to salary to partner's account. 5. Partner's commission. A. For crediting commission to a partner to partner's capital account, journal entry, commission to partner's account debit to partner's capital or current accounts individually. B. For transferring commission paid to partners to profit and loss appropriation account, journal entry, profit and loss appropriation account debit to commission to partners' current or capital account. 6. Share of profit or loss after appropriation. So after doing all the adjustments, you will arrive at either profit or loss. Let's see the journal entry. If there is a profit, profit and loss appropriation account debit to partners' capital or current accounts individually. If loss, partners' capital or current accounts debit individually to profit and loss appropriation account. So here you have the pro forma of profit and loss appropriation account. The rule for posting the entries will be debit all expenses and losses, credit all incomes and gain. On the debit side, we record items which will decreases the funds of the business firm, like the net loss, interest on capital, salary and commission paid to the partners, interest on partners' loan. On the credit side, the net profit of the firm, interest on drawings. By the end, we will be doing the balancing of accounts. While doing the balancing of accounts, suppose if your credit side is more than the debit side, we will get profit, and this profit is distributed among the partners. So if you have 3 partners, it will be distributed in their profit sharing ratio. For example, it can be 3:2:1. And suppose if there is a loss after all the adjustment, then that will be shown on the credit side as distribution of losses among the partners. Again, as per the example, it will be distributed in the profit sharing ratio, that is 3:2:1. Kindly take up this test. Thank you.